Hello and namaskar. Welcome to our weekly commodity audiocast. I am your host Ravindra Rao, representing the Kotak Securities Commodity Research Desk. As in each episode, we'll be guiding you by sharing valuable insights, discussing trading setups, and exploring the latest trends that are shaping the market landscape. So let's explore the fascinating realm of commodity markets. The global financial landscape experienced fluctuations throughout the previous week, with investor confidence swaying due to concerns in the US banking sector and evolving expectations regarding Federal Reserve interest rate cuts. The release of robust US jobs report, coupled with indications from the Federal Reserve chief that a March rate cut is unlikely, added complexity to the market dynamics. During the January FOMC meeting, the Federal Reserve decided to keep Fed funds rate unchanged at 5.25% to 5.5%, marking the fourth consecutive meeting at this level. The Fed acknowledged improving risks concerning their employment and inflation goals, but emphasized that rate reductions would only be considered when they have a greater confidence in sustainable inflation movement towards 2%. Strong US jobs data for January and stable unemployment rates contributed to a decrease in market expectations for interest rate cuts. Coming to commodity specific, COMEX gold prices witnessed a weekly gain influenced by various factors, including the prospect of a US interest rate cut, declining US Treasury yields, uncertainty surrounding New York Community Bancorp, and geopolitical tensions in the Middle East. However, on Friday, gold relinquished around 1% of its gains as investors adjusted their positions following the release of the non-farm US non-farm payrolls report, indicating a resilient labor market. Silver prices experienced a decline, reaching approximately $22.5 per ounce, reflecting a pessimistic industrial outlook amid projections of a further economic slowdown in China, a significant consumer of the metal. In terms of pricing, COMEX gold appears to have encountered a resistance level around $2,080 per troy ounce. It is essential to note that a sustained upward movement beyond this resistance is required to propel it towards the next level at $2,100 per troy ounce. In the absence of such sustained upward movement, there is a possibility that bears could exert downward pressure, aiming for the immediate support level at around $2028 per troy ounce. On the domestic front, gold fell from around 63,000 to 40 levels and closed near 62,590. On the lower side, support is near 62,000, which is the 60-day SMA. If it moves below that, then there is a chance the prices might further move lower, or else it might trade between 63,000 on the higher side and 62,000 on the lower side. In case of silver, silver has again taken resistance near $23.50. $23.65 is the 200-day moving average, and until it moves above that, the prices might stay in a sideways range. On the lower side, support is near 22 to $22.20. It should not move below that. If it sustains below that, then there is a chance of further downside movement, or else we expect 22.30 on the lower side and around 23.50 on the higher side should be the ideal range. In case of domestic market, 71,300 was a good support. Now that has been penetrated. On the lower side, support now is close to 70,300 levels. So there is a possibility it might further drift lower, provided the resistance on the higher side holds, which is around 71,900. And if that is taken out, then prices might once again move close to 72,650, 72,700 levels. Coming to energies, WTI crude faced a substantial weekly decline of over 7%, driven by unconfirmed reports of progress in negotiations to pause the Israel Hamas conflict. Despite this, crude oil closed January with a 6% upside, marking its first monthly gain since September, driven by escalating fears of wider conflicts in the Middle East. As for WTI crude oil, in terms of pricing, it has reached a critical trend line support at approximately $71 per barrel. A significant breach of this support, confirmed by a closing basis, has the potential to drive crude oil prices further down, targeting a level around $67 per barrel. Conversely, resistance is identifiable near $74 per barrel, and a breach above this level could reinvigorate bullish sentiments, providing an advantage to bulls in the market. On the domestic front, strong support is near, I would say it is close to 5950, which is also a trendline support. If it sustains below that, then we might see prices further drifting down towards 5870 to 5850, which is again a strong support. And on the upside, 6130 to 6190 would act as the resistance zone, which are the 200 and 60-day moving averages. If it sustains above that, then the prices might move higher, or else we expect the prices to be in the range of 5950 on the lower side and 6140 on the higher side. Finally, in case of LME based metals, we saw a decline in the previous week as China's manufacturing PMI contracted for a fourth straight month in January, owing to dwindling new orders, thereby suggesting weak demand ahead of the upcoming Lunar New Year holiday. On the pricing front, copper has once again moved lower after testing close to 740 odd levels. It is currently trading near the 200-day moving average, which is close to 720. And until that holds, there is a possibility we might again see a rebound. And a good rising window resistance support is near 718.50. So if it comes down, it might give a spike towards 718.50, but then from there we might again see a bounce back. But that remains a very crucial support, and below that 712, which we have also mentioned in our earlier podcast, is a very strong support. If that is taken out, we might see a breakdown in copper prices. So levels to watch for in copper would be 718.50 on the lower side, and after that 712, which would be the breakdown level. So, in the current week, market participants will closely watch the US ISM services PMI, speeches from Federal Reserve officials, and Chinese inflation numbers. Federal Reserve Chair Jerome Powell's interview on CBS News is anticipated to provide insights into inflation risks, expected rate cuts, and the state of banking system. Additionally, concerns regarding loans linked to commercial property and associated risks from exposure to the US real estate market may impact global risk sentiments. As geopolitical tensions in the Middle East continue to simmer, oil prices are expected to remain volatile, posing a potential threat to global supply. The intricate interplay of economic indicators, central bank policies, and geopolitical events will likely keep investors on their toes, navigating through a landscape of uncertainty in the weeks ahead. So, as we wrap up another insightful episode of Commodity Audiocast, we hope you have gained valuable insights to enhance your commodity trading journey. Thank you for tuning in, and we look forward to having you with us again next week. Until then, happy trading.